Good morning, all. CamelbackTrading.org coming to you this Friday morning, March 10th. We're looking at Window Trader's market profile of the ES and SPY. So after yesterday's decimation of the bulls, we are now waiting for the non-farm payroll number. All overnight has pressed lower, as you can see. We basically traded below Thursday's range all through the overnight. So the market is continuing to get shorter. We had an outside day down, which is bearish. We have an opportunity for an outside week down if we close below last week's low. We'll have to see by the end of today's trading day. We had a triple distribution day again to the downside. We had our heaviest volume of the year last year. Again, that's not saying a lot, 111 million. We've only had 5 or 6 days of over 100 million this year. But at least it's a step in the right direction with heavy volume and good range. We are dealing strictly with short-term emotional trading. You have algorithms that have no emotion, and you have retail traders that have nothing but emotion. And they feed off of each other. And that's why we get these gaps and these continually huge trend days, which turn into triple distributions a lot of time. As far as NQ right now, they're trading in their lower distribution. They did trade lower overnight. Righty, right below yesterday's low. They've been trading lower throughout the overnight session. Remember that both their monthly and daily are firmly down, out of balance. I'll be recapping all of these charts tonight. As far as a game plan, well, look, it's pretty simple. We know how these short-term traders run on a dime. So if the non-farm payroll number reflects that maybe it's not going to be a 50 basis point cut, well, then they're going to take back a lot of this trend day. If, however, it reinforces what is now the majority, I think it's like 78 or 80% now, expecting 80% rate, 50% basis point in 2 weeks or whatever, well, you're going to get more continued pressure to the downside. Regardless of what happens, there are things to lean on. If the market does start pushing up, we did not probe, but you have your first set of single prints, which is right below K's low. I think that becomes an important level for the bears for two reasons. I don't mind taking back one of the distributions, but the bigger reason is value. You don't want to get acceptance back into yesterday's value. If you start getting acceptance into yesterday's value, and then the bulls can start grinding away and taking back this set of single prints, okay, possibly, if not more. So at best, the bears would like to hold any kind of short covering rally to basically J's low to J's high, and in reverse and keep value lower or overlap into lower. On the flip side, for the bulls, things get pretty precarious if we start going lower. There's not much below us. You have another weekly low down below. So again, we also are sitting right below or on that lower high trend line we spoke about from all of last year. And you might be below the 200 if you get more of a push down. Right now we are below the 200. So all of a sudden we'd be below all three of the moving averages, 20, 50, and 200. And any momentum the bulls had to start the year would go out the window. Thanks for the likes and subscribing. Good luck trading today. And we'll recap the day and the week at 4 p.m. Oh, wait a second. I didn't do our chart real quick. Sorry. Just quickly on the chart because I'll just recap them. So here's the daily. Okay? So possibility of being below the trend line, the 200. Your next real destination in SPY would be down around the 386.27 level, so about $3 lower from where we're, or whatever, $3-4 lower from where we're trading now. And then again, if you start getting acceptance below there, you're going to come into this large balance that we spent a good part of December in. Now have a good day trading, and we'll recap the day and the week at 4 p.m.